Hello, this is Rebecca Benneyworth. This session is one of 3 I'm recording this month regarding the new MTD rules that were released on the 23rd of September. So I'm going to be going through some parts of the regulations to enable you to get ready for MTD when it comes. So this first session is just an overview of the requirements of the regulations for businesses and landlords. So a quick recap first of the primary legislation. Now, we got that in the back half of 2017 in the Finance Number 2 Act 2017. And the MTD legislation for income tax was included at sections 60 and 61 and Schedule 14 of the Act. The most important part was in section 60, which invented a new schedule to the Taxes Management Act 1970, Schedule A1, which actually comes before Schedule 1, and then we've got 1A, 1B, and so on. So Schedule A1, the first schedule now to the Taxes Management Act, which covers digital obligations, digital record keeping, and so on. So most of the primary legislation actually set out what regulations to be made subsequently would include, and it's those regulations that are really the meat of my talk today. The Act did envisage a couple of things that are on the horizon that we now know more about. It envisaged periodic updates, which were to be made electronically to include specified information, and that information was to be any information relevant to the calculation of the profit, loss or income, including information about receipts and payments. They would have to be made not more than once every 3 months, and I'll be going into some detail about that. And secondly, for an end of period statement, which is very, very quickly going to be known as the EOPS, EOPS, and that's made for the basis period and is due according to the primary legislation by the 31st of January following the end of the tax year. So actually very similar to the self-assessment return that we have under the current legislation. So finally, the primary legislation required the keeping of digital records by affected businesses. Those records, we're told, can include any information the Commission has decided relevant to ascertaining the information required to be provided by the quarterly updates. So it's the quarterly updates that drives the content of the records. There is a penalty available for breaches of up to £3,000. And before you get a horrible shock from that, I will remind you that that is actually the current penalty for breaches of the record keeping requirements. Not that amount, but just up to that amount. And of course, we very, very rarely see any penalties imposed. But this is available where businesses decide they're just not going to join in the game. So the regulations, I'm going to give you a run through the broad requirements of those regulations. They were issued on the 23rd of September 2021 after much waiting. They had been planned for much earlier in 2021, but I think HMRC wanted to rework some aspects of the original draft legislation to really take into account discussions they'd had with the professional accountancy and tax bodies. So they are in Statutory Instrument 2021 number 1076, not terribly long, only 15 pages, including the explanatory notes, and there is a blank page amongst that, so not a huge amount of information to take in. What we also know, and the regulations specify it, but we've also got an appointed day order for Section 60 of the Finance Act, Finance Number 2 Act 2017, we know the start date is now the 6th of April 2024 and not 2023 as expected. Now, in one of my other sessions that I'm recording for this release, I will talk about that in particular to try and get across to you that we don't actually have an extra year. It sounds a bit like you've got an extra year, 2023 to 2024, but when you find out some of the detail of the timelines and the requirements, which I'll be going through in that session, you'll realise that actually many businesses don't have an extra year. Some actually only have an extra few days over and above what you thought you were going to get for them. Partnerships are not in the first phase. They'll come in 25, with complex partnerships in 26. Sole traders and landlords are all in from the 6th of April 2024, with an income limit of £10,000, and that's the subject of my third recording for this release on MTD. I'll be talking about how that income threshold works and what you'll need to check, what you're looking at, and so on and so forth. So let's start by introducing what are called the digital requirements. So if you're subject to MTD, you must comply with the digital requirements. And in order to meet those, you have to use what's called functional compatible software. Now, there is a definition of that in the regs. I'm not going to go through that. We're used to the term from VAT. What it does mean is one or more computer programs, plus, if you like, one or more spreadsheets, which taken together meet the requirements of Making Tax Digital. That is, they allow you to keep records, to make quarterly and annual submissions, and to receive information back from HMRC. So the digital requirements, specifically, every business and every individual who has more than one business has to meet these requirements for each business. They have to record digital records and preserve them for the period required by tax law. They have to provide quarterly updates, and they have to provide an end of period statement. If they're required to make a tax return rather than to actually meet the full obligations of Making Tax Digital, they can use functional compatible software to do that. And they don't have to elect into MTD in order to provide the data, the information they need to provide without fully electing into MTD. So let's now have a look at those three aspects. So this is the outline requirements. I'm just going to go through briefly each of those aspects. So digital records are covered by regulations 5 and 6. And you are required to keep digital records from your digital start date, which I will be talking about in a bit of detail, from that digital start date until the business ceases. And so that's your period of keeping digital records. The retention periods are already given by Tax Management Act. The digital records must include records of all of the business transactions, so all the transactions made in the course of business, so receipts and payments and so on. And they need to record 3 data items for each transaction. Firstly, the amount of the transaction. Secondly, the date of the transaction according to the accounting method adopted. So whether you're using cash accounting or accounting under Section 25 of ITOIA under the full GAAP rules, whichever date is applicable to that. And then finally, the category into which the transaction falls. So the analysis of the transaction. Is it an income item? Is it turnover? Is it other business income? Is it an expense item? Is it motor expenses? Is it whatever? The categories that we are required to use, so what you set up as a chart of accounts if you're setting software up, will be determined by an update notice. And the update notice will specify the various headings. Now, what we expect is that the chart of accounts is going to follow the self-assessment, self-employment page, SA 103 full, and include all of the headings on there. It's pretty likely you may want to keep more analysis in your accounting records, but what you will have to provide is an update with those headings on. So you're going to have to figure out how to map across from what you're using in the records across to the required reporting detail. The records must be kept up to date, and you must record all of the transactions in a quarter by the earlier of the quarterly deadline, which you'll see in just a minute, or immediately before the quarterly update is filed. What that means is that records must be maintained by law at least quarterly, and anyone who doesn't do that could be liable to a fine of up to £3,000, as you've already heard. So let's go on to the quarterly updates. So the quarterly updates are provided in respect of a fixed 3-month period for all businesses. So the quarterly updates don't follow your accounting period, they are fixed. What that means is that everyone is filing for the same period by the same date. The quarterly dates follow the tax year, sadly, so they start on the 6th of April. They run to the 5th of July, and then you have a month to file, and so on through the tax year, as you can see from the slide. So you'll be filing by the 5th of the month, a month after the taxed quarter's end. Now, before you despair and decide that now is the time for you to retire, I have good news. And the good news is in the shape of Regulation 7, Para 6, which allows you to make a calendar quarters election. So a person may make a calendar quarter election and may do so in respect of each business that they have. So maybe a trade and a property business. Make an election separately if you wish. And that will align the quarter dates with the normal calendar quarters, so 31st of March and so on. You'll need to make the election before the deadline for your Q1 submission in the first year that you wish it to apply. So obviously I can see a practical implication of this is we're all going to be making those elections in the very, very first quarter, the quarter starting the 6th of April 2024. You have the same filing date, so that's actually going to give you a month and 5 days to make your filing, which seems like a fair way of going about it. But this is one of the things you've got to get your head around, is that every single client is going to be filing to the same dates, and therefore you're going to have a very, very lumpy workload within your firm. So the quarterly updates are prepared one for each trade or property business. What you'll have to decide practically is whether you actually go for separate software licenses, which is going to run out very expensive, or quite how you're going to do this. The information that you have to supply will be specified in an update notice. Remember, it's that update notice that determines the headings in your records, because it is the quarterly update that drives the information you keep. There's no declaration with the quarterly submissions, so there's no accuracy requirement, and we've been pretty much reassured about that ever since the proposals were put forward. Notice that the quarterly updates are cumulative, so they will build up through the year and be the total of all of the transactions under each heading for the period. And then finally, the third requirement of the digital requirements, the end of period statement, or the EOPS. Now, the end of period statement is filed not in respect of particular dates, quarter dates, but is filed for your basis period. And so that will run to whatever your accounting period is. It's due by the 31st of January after the end of the fiscal year. And you will be doing one for each trade. So if you've got 2 trades and a UK letting activity, that will be 3 end of period statements. So that's 15 filings altogether, 4 quarters plus 1 end of period for each activity. All due, however, on the same date. Basis period reform may affect this, but basis period reform has been kicked down the road, so we don't quite know where we're going with that. The end of period statement will have the end of period information, which we'll find out at some point soon exactly what that is. But obviously what you can expect is it will be the annual final figures. And there is a declaration on this one, so your client will be required to give a declaration that it's correct and complete to the best of their knowledge and belief. The key thing about the EOPS is it is decoupled from the quarterly reports. And what I mean by that is, in a tax year, you may, if you've gone for a quarterly, a calendar quarters election, you will file 30th of June, 30th September, 31st December, 31st of March. And then by the following January, you will file your end of period statement. But if, for example, you have a 31st of October year end, then it will be the year to 31st of October in the relevant fiscal year that you file by. Now, parallel your EOPS with your completing your self-assessment supplementary for self-employment, and that's about where you are. Obviously, if your accounting date is 31st of March, it will follow your filings within the year. So those are the key requirements. That's the outline of an overview of what the requirements of MTD are. So check out my other 2 units in this month's release for a little bit more detail on MTD. And this is Rebecca Benneyworth. Thank you very much for listening.